Hi, everyone. We'll go ahead and get started on our last webinar in our crop insurance series. So we've been doing this series for about a year now, and this is our final live webinar. So we're just going to wrap up this series with some new information about a lot of the policies and programs we've been talking about over the past year, and also remind you of a few closing dates for some of these policies. So I want to start off with the new updates for 2023. So we'll be looking at some updates for the whole farm revenue protection policy, the microfarm policy, and then some new organic benefits. So first is the whole farm revenue protection. Remember, this policy combines everything you're doing on your farm under one policy. So it combines all the sales from your vegetables, from your fruit, from your animals, eggs, maybe value-added products, anything you're doing under one policy. And with the whole farm revenue, you do have to report your individual yields and individual revenue and expenses for each different commodity. So, whether you've got tomatoes, pumpkins, and maybe some eggs, you'd need to report expenses and how much you earn from each of those different commodities. Well, the new changes for 2023 kind of deal with that expense and that yield reporting. So in the instance of prevented planting that's caused by a natural disaster or some weather event that is insurable against, then they will just replace any expense reporting that might be asked of you with just a 40% reduction in what you expect for your revenue for those commodities. So if you're not going to, earn as much or not have much production in that commodity at all, they're just going to automatically give you that 40% reduction instead of you having to go through and fill out all the paperwork and do all that reporting. And the same reduction in paperwork is what they're going for with the yield reporting. So they're adjusting some of the yield reporting requirements that are due when you close on the policy. And then they're also allowing you to report and self-certify the yield at the beginning of the year. So all of this will reduce that amount of paperwork on the growers and producers, as well as the insurance agent. All the people I've talked to over the past year have mentioned that the whole farm revenue policies do take a lot to complete. A lot of crop insurance agents don't do the policies because they are a little intensive with the amount of paperwork and the application. Gathering all that information is hard on growers. And some agents just don't do it because they don't have experience doing those large policies. So these changes are meant to kind of reduce the amount of paperwork and the amount of records needed for the application. And so the microfarm policy that was introduced for this growing season, this current growing season, 2022, was also aimed at reducing the amount of paperwork, the amount of records required. And so that policy is just like a whole farm revenue protection policy, but it's designed specifically for direct marketing farms. Specifically, when it launched, it was for farms that are under $100,000 in approved revenue yearly. The change they've made this year is increase that from $100,000 to $350,000. The point of the microfarm policy was to get those farms, those growers with lower approved revenues, used to crop insurance, get them into the policy without requiring all that paperwork from them. So with the microfarm policy, the difference with the whole farm revenue is with microfarm, you don't look at each individual commodity's expenses and yields. You just look at the revenue. It combines all those commodities into one commodity code, and you provide your revenue for that commodity code. And this was aimed at direct marketing firms because a lot of people that are selling directly to consumers are selling small amounts, lots of small amounts. So it's hard to keep track of every little, how many tomatoes they sold this day and that day and that day, how many pumpkins they sold, for the whole year. It's hard to keep track of all of that. So this was meant to cut back on that. Now they're increasing the approved revenue to allow more growers, more farms to participate in this sort of easier to apply for program. Now, this year, the plan had been for if you had the microfarm in 2022 and you wanted it again in 2023, but your approved revenue increased past that $100,000 mark, if you had between $100,000 and $120,000, they were going to allow you to participate in the microfarm for that next year as sort of a stepping stone into the whole farm revenue. But this year they've increased that to $400,000. So it gives you that extra year if you're seeing growth. It gives you that extra year in the microfarm policy. The last new changes I want to talk about are some benefits for organic growers that are now available for crop insurance. So some money was set aside recently to promote organic growing, keep growers farming organically. So part of that money was used to create the Transitional and Organic Grower Assistance, or TOGA program. So this program, the idea of it is to reduce the overall crop insurance premium bills. And this will hopefully allow growers to continue using organic practices and entice other growers to transition to organic, while still being able to afford crop insurance. So this is helping them to pay a little bit of their premiums so that that's not as much of a burden as it had been. If you choose to, or if you are doing crop insurance and you receive the TOGA assistance, you can also still receive assistance from any other premium subsidy programs. So there are some programs like, or crop insurance policies that have written in their premium assistance or premium subsidy for growers that meet certain qualifications, whether that be beginning grower, a veteran farmer, socially disadvantaged grower, things like that. They might already be receiving some premium subsidy or a premium reduction. And with the TOGA, you can use that on top of it. Also, there's no enrollment or paperwork needed for this assistance to apply to your premium. It's automatically applied. When you're applying for the crop insurance, they'll know if you're an organic grower or your crops are in transition to organic. This is all on your paperwork, so this assistance is automatically applied. Now, we don't know the complete benefits right now of what this will mean for growers, but what we do know is that growers will receive 10 percentage points of premium subsidy for all crops that are in transition. So they are paying at least, or 10 percentage points of your premium for you. And also, it's paying that 10 percentage points of premium subsidy for all whole farm revenue protection policies. And this will cover any number of crops that are in transition or organic. So this is anyone with the whole farm revenue protection for any crops they're growing that are transition or organic will receive 10 percentage points of premium subsidy. So they'll pay for 10% of your premium. They're also allowing people to receive these premium assistance on crops with individual crop insurance policies as well. So, if you've got a single policy on one commodity, they're also allowing that. Next, I wanted to talk about some of the closing dates. If you've been watching these videos and you become interested in crop insurance, or you've been participating in the webinars, and you think some of these might work good for your operation, it's important to keep in mind the closing date so that you don't miss your opportunity to protect your revenue. So with the whole farm revenue protection policies and the microfarm policies, most counties are going to have a closing date of March 15th. There might be a few counties that have a different date. So you do need to check with your agent to find out when that closing date will be. And also, if you're a late fiscal tax filer, you might have a closing date of November 20th. So you need to keep these things in mind and find an agent, start talking to them about what policies you might be looking at, because that could determine when your closing date is. Next, we're going to move on to the Non-Insured Crop Disaster Assistance Program, or NAP. Next, I've got some dates for NAP, or Non-Insured Crop Disaster Assistance Program. So if you'll remember, the NAP program is a single commodity program. So you need a different policy for each commodity you have. And the closing dates kind of reflect that different nature of each commodity. So you'll see we've missed on May 1st, that was the closing date for nursery crops for the 2023 growing season. We also missed September 1st, which was the closing date for aquaculture and Christmas trees. And our next closing date, which is in a month from now, on October 15th, 2022, is the fall planted garlic, onions, and strawberries. Some of these dates have changed from last year, so you might need to take a look at these again. These do change every year. They reissue new closing dates, depending on feedback from growers on when they would know what their yield might be based on how many they actually planted. Strawberries last year, the date was in September. This year, they've moved it back to October because growers had said, hey, we're still being able to plant in October through September now. So we don't know how much we've actually planted by your closing date in September. And so the FSA did move the closing date back to October. Also on October 15th, any perennial fruit except for apples and any perennial nuts that are grown on trees, that closing date is in October. There are two more closing dates in 2022. Honey, the closing date is December 1st. And then asparagus, artichokes, and perennial herbs have a closing date of December 15th. Apple trees, the closing date for that is January 31st of 2023. And then most of your annual crops, so vegetables, annual herbs, cut flowers, those are going to have a March 15th, 2023 closing date. The last closing date I want to talk about is the Tree Assistance Program, or TAP. Now, this one doesn't have a closing date, but I wanted to remind everyone that this is our only program we've talked about over this series that you only apply for when you have damage or loss. So you have up to 90 days after loss or disaster to apply for this. And this will be help to replant or rehabilitate trees. Now, remember, these are trees that you're either selling through a nursery, so nursery trees, and then any trees that you are selling the fruit or nuts from. And lastly, I want to finish up with places you can go to get help with crop insurance. So where should you go for information? One of the best places to look is the USDA RMA, the Risk Management Agency. So you can look on their website for information on multi-peril crop insurance, the whole farm revenue protection policies, microfarm policies, and the rainfall index program. You can find the most accurate information from them because they are the government agency who creates these policies. They write these policies, they make any of the changes to these policies, so you can keep up to date with any information on these policies through them. You can also look to the FSA for information on the NAP, TAP, and any other program they have. They do have a lot of livestock disaster policies or programs. They've got some more that can benefit growers in preparation for disaster. And you can also apply for any of these programs through them. You would go to your local FSA office, and they would be able to tell you what you need to have together in order to apply for these programs. And lastly, you can go to the Kentucky Horticulture Council webpage for resource links and links to all of our past recorded webinars and videos. And we also have a playlist on YouTube that collects all these recorded webinars and videos and any conference videos or recorded presentations that we've done throughout the year. Lastly, go to crop insurance agents for your operation-specific questions. They would be able to tell you what your premium might be. They will be the ones that can help you apply for crop insurance. And they'll probably be able to tell you what would work best for your operation. To find a crop insurance agent, you can use the USDA RMA's online agent locator tool. So this will give you a list of any crop insurance agent that is licensed in Kentucky. Remember, the agents don't have to be located in Kentucky. They just have to be licensed here. And now this could be useful for growers with, very specific rare commodities, or growers that want an experienced agent to help with their whole farm revenue policy. It may take a little calling or a little emailing to find an agent that will work best with you in your operations needs, but you can find a list of those agents through that online locator tool. I just want to thank everyone for joining us over the past year to learn about crop insurance through this webinar series. If you have any questions, you can feel free to email me at dakota@kyhortcouncil.org, and I will hopefully answer any questions you have or help you find the answers you're looking for. And once again, we want to thank our funding that came from the Southern Extension Risk Management Education Center and the USDA National Institute for Food and Agriculture. They helped us produce these videos and these webinars throughout the past year and create all the resources and information we've put together.